In the mixed Christmas sales across the retail sector, there's some pretty disappointing Christmas sales reported by Woolworths and Truworths last week. Is it a sign of bad news to come? Because then Foschini Group this week came out with better than expected trading updates showing that their Christmas season was pretty good. So how do we understand what is really happening in the retail sector? There's also that much talked about Christo Weise backed very complicated deal that could see the creation of the biggest retailer on the African continent, a merger of Steinhoff and Shoprite. This is The Moneymakers. I'm Bruce Whitfield. Tonight, I'm joined by the guy who knows everything about retail. He is the analyst Syd Vianello. He joins me talking Woolworths, Truworths, Steinhoff, Shoprite, TFG, everything else in between, talking retail. Was December a dog or was it a blessing in disguise? Because Foschini Group seemed to have a great time, Truworths and Woolies not so much.
Well, Foschini, I suppose, was the only one that came out with decent numbers.
They were growing, what, 15%?
Yeah, but you must just understand what Foschini said. They started off by saying our sales in the month of December were up 14 point something percent. They then went on, and the narrative carried on, and you get to the last paragraph, and it says, for the 9 months ended the same date, the 24th of December, the sales figure was only 8 point something or whatever. So let's call it about 9%.
But still growing north of inflation.
Yes. But that was pretty much in line with what they reported for the 6 months to the end of September. So what it's really telling you, and you saw it, you also saw a little bit of it in the Mr. Price numbers that came out this morning, that there seems to have been a bit of a further skewing of the sales to the month of December, because obviously if December, in the case of Foschini, gave you 14%, and the rest of and the 3 months gave you, call it 9%, by default,
October and November were dogs.
Exactly, and I think from what we heard in the trade, October was an absolutely terrible month. So it's really telling you that October and November were not that great, although the South Africa has now cottoned on to this Black Friday event as they have in America. That particular one privately owned retailer told me that up until Black Friday, and they have a chain of shoe stores around the country, up until that Friday, their numbers for November were looking pretty awful as well. Then came Friday, and after the end of Friday's trading, November suddenly looked pretty good. So even, people they were holding back throughout November, waiting for the big sale event, because in expectation there were going to be huge discounts and what have you through that particular day. So people were holding back for that as well.
So I mean, that doesn't bode very well for retailers then, surely?
Well, it just makes life a lot more difficult for retailers to predict, because if we look at the overall picture, people are going to earn X amount of money, and they're going to spend after they're going to spend in terms of the old Maslow hierarchy. The first thing is the roof over my head, and then food and what have you. And after I've covered those items, and that of course is then a function of what are the individual inflation rates for the priority items, then what's left, that's what I'm going to spend. Now, why things are being skewed so heavily towards the last few days, your thesis is probably correct, but ultimately there is going to be X amount of money to spend, and it just looks like it's going to be spent closer to D-Day rather than throughout the year.
And then for cheapskates like myself, who love sales, walking around the shops, and I did a little bit of research by going and having a look around Santon and Rosebank this morning, and you just see the big sale signs up. I mean, you don't like anything that's on sale.
There's nothing,
but they're not huge. They seem to be managing stock levels very, very efficiently.
No, you take one retailer in particular, Truworths. If you take the Truworths men's division, they seem to have today currently more sales than what they would have had a few years ago. But the quantum of goods on the sale covers 2 racks.
Yeah.
That's it.
It's so boring.
Well, what it's telling you is that it's extremely well managed.
Yes.
And Truworths in particular are extremely good with the using the newer forms of marketing, cell phones and SMSs and what have you. So they're encouraging people to go into the store, but what do they actually find on the sale is actually a pittance.
Yes.
But of course, while you're walking there, hopefully you're going to find some some really nice full margin product, and hopefully you're going to buy it, and that's where they're going to make their money.
Middle of last year, the wheels seemed to come off Mr. Price quite badly. We're trading over $200 a share, plummeted all the way to the 120s.
Well, of course, but the half-year numbers up to September were poor. And I must be honest, I got it wrong. I thought that Mr. Price, certainly by walking the stores throughout the month of December, I saw longer queues at Mr. Price than at any of their major competitors. And I thought that would flow through to the numbers, but when you saw the numbers this morning, it a little bit flowed through, but nothing like what I thought would flow through.
Are they still in trouble?
I don't think they're in trouble, because they also saw an uptick in the month of December versus the 3-month period, October, November, December. So there was a bit of an uptick in December. I don't think they're in trouble. I think they probably hit the bottom, like I think many of their competitors as well. And I was at a birthday party on Saturday night, and somebody asked me the same kind of question, and my answer was, the question was, what is my view on the future going forward? And I said, I think there are enough positive features to suggest to me that maybe retail has hit the bottom. And 2 things spring to mind immediately, maybe 3. The first one being that the drought has effectively been broken.
The Valdam sitting at like 60%. It's brilliant.
Just over 60.
Yeah.
Just over 60, and there's a lot of water still flowing in from last weekend's rains. It could get to 65. But the maize crop in the Eastern Free State is, and the northern parts of the Drakensberg area are really looking good. That's number one. So the maize crop is looking a lot better. We should cease imports by the middle of the year.
Yeah.
We then move to export parity pricing, which brings the price down. That could result in a lower food inflation. I don't think deflation, but certainly lower food inflation. So those are 2 positive factors. And of course,
gives the Reserve Bank the opportunity to cut rates.
And the third one is commodity prices are a lot better, particularly coal and iron ore.
Iron ore was like 105% up on this time last year. Coal prices are up in the high double digits.
Iron ore jumped in the last few days again. It's now up to, I think I saw this morning, about $83. Now, a year ago, it was about $40-odd. It was really in the doldrums. The price of coal has jumped even more than that. So the Reserve Bank could well be in a position to cut rates. Let's look at it another way. The chances of a rate hike, I think, are remote in the extreme. Right now. So those sort of things do look positive, because there's a ripple effect through the system. The iron ore mines may not employ more people directly, but they're going to buy more consumables, and the coal mines will do exactly the same thing, and the farmers are going to buy a lot more consumables, maybe a few new tractors and harvesters, and all these things have a ripple effect throughout the economy.
I saw 2 interesting contradictory tweets, almost contradictory tweets from the same organization this morning. Jacques Cellier, the CEO of FNB, published a photograph, a very nice cartoon, a picture of a cartoon of a woman sitting in a retail store trying on shoes, and the salesman is sweating. There are 30 pairs of shoes lying around. She goes, "Oh, that's absolutely perfect. Can I use your Wi-Fi just to see if I can get it cheaper online?" Which is brilliant. Which is lovely. And that's a trend. And then Syd Vianello, the chief economist at FNB, talking about how South Africa is at the forefront globally of mall expansion. So we're still seeing mall expansion, which is great for the footprint of retailers. But on the other side of it, we've got this online threat.
No, it's terrible for, forget about the online thing. That's another factor, but it's terrible for cannibalization. Because, I mean, I've always argued, you've got X amount of money, you've got 100, let's call it 100 rands. I've got 100 rands to spend. If there are 10 malls, I'm going to spend 10 rands in each mall. Well, if there are 20 malls, I'm going to spend 5 rands in each mall, because I've only got 100 rands to spend. And well, up until recently, I also struggled to get extra credit. So I couldn't even increase the 100 to 120 because of the new affordability rules. And by the way, the affordability rules is another factor that gives me confidence, because it's now in the system. We are now through the year-long impact of that factor on retail sales. So for the first time, we're going to compare apples and apples again. And from that perspective, I think you should start seeing an improvement in credit sales. It may be, I know that the Edcon guys said that, or they implied that the ABSA people who run their book seem to be more inclined, or more positively inclined, to opening the taps a little bit again. So maybe that will also feed through into slightly better sales momentum going through into 2017.
Retail pick for 2017? Battered, bruised and slightly broken Mr. Price? Truworths, for Sheeny Group?
Well,
where would you go?
I think, well, you know, on the one hand, I kind of said to myself the cash retailers would be the place to be, but my kind of gut feel tells me that maybe the credit, because of the affordability thing coming through, and maybe consumers not being in as much debt as they were previously.
Pick one for Sheeny.
Well, if I look
Truworths.
at that, I'd probably look at Truworths. Funny enough.
Okay. And then in 12 seconds, is the Steinhoff Shoprite merger going to happen? Looks like a marriage made in heaven.
It does look like one made in heaven. The pricing is clearly the issue at stake.
And we don't know that yet. Can it be resolved? Yes, I think there are ways it can be resolved. If you've got another minute, I think it's very important. You know, I think a lot of people are let's say delving too much, hovering or worrying too much about the pricing issue and what have you. Ultimately, this transaction has got to happen, because this transaction is probably, in my opinion, and this is not me talking to management and telling you what management said, I haven't spoken to them. This is my view, having known them for just under 20 years. This is the second last leg for the final, before the final leg is executed. But you've got to execute this one before the final one. What's the final one?
The final one, in my opinion, okay, so what you've got to do now, you're going to take all the African stuff and put it in a single vehicle.
Yes.
To get the pricing right, yes, it can be done. There are ways and means, convertibles, stocks, debt, all sorts of things. Then, once you've done that, the final leg is that Steinhoff International takes its Retail Africa shares and spins them off to the shareholders. Now you have an international retailer, which international investors want to buy into, with, call it, no emerging market exposure, and you have an emerging market retailer that a lot of fund managers who have that mandate can invest in directly. We don't have the cross-selling, the cross-holding anymore. But for the final part of the thing to happen, which is ultimate, which I believe was the ultimate goal, this one has got to happen first.
Got you.
That's why I believe it's got to happen.
There we go. We'll leave it there. Syd Vianello, always a font of wisdom and great insights. The retail analyst Syd Vianello here on The Moneymakers. Profits and plunges and blunders and booms and busts and market quests for returns. More on all of that next time on The Moneymakers. Keep a sharp eye on your schedule. Till next time, bye-bye.